So welcome everybody. My name is Peter Youssef, Senior Market Analyst at IronFX. With me is my colleague, Feroz Bandalis, also a Market Analyst at IronFX. We promised about this live to discuss the results of the US elections. And definitely it was a shocker. It was a triumphant comeback of Trump. The majorities reached were clear. There was no doubt about Trump's victory in the presidential elections, but it wasn't only that. The Republicans also secured a majority. They locked in at the Senate. And they seem to be moving towards a majority also for the House of Representatives. And let's not forget that most of the Supreme Court judges tend to be leaning more towards the conservative side. So practically that allows Trump to have aligned the administrative side of the US government, the legislative side of the US government, and the judicial side. That's providing him a very free hand to move on. Feroz, how have you seen the US election results?
Well, with the US elections having effectively finished, but we do still have the House of Representatives that are still being counted, if I'm not mistaken.
Yeah.
We've seen a very clear victory for Trump, which is something I don't think many people were expecting. Now, a lot of analysts were expecting Pennsylvania to be the decider, but with the number of votes coming in for Arizona, Nevada, Michigan, and Wisconsin, it looks like Trump was in the lead for all of them up until yesterday. And I'm not sure if they've been called just yet, but if they are called for Trump, that would mean that he's won almost, if not all of the swing states, which is an incredible victory for someone that has been indicted. There was an assassination attempt on his life earlier on this year during his campaign, and has now emerged as a clear victor in the US presidential elections. And not only that, he has control of the Senate and possibly even the House, effectively securing a red sweep, which is very, very worrying for the Democrats. Now, there are some positive implications for a red sweep and some negative implications for a red sweep, as we discussed earlier on this week. But for now, I think I would really like to see which appointees are going to be entering the government, and in particular, Elon Musk and RFK as well. I would like to see where exactly they're being posted and how that could shape the new and incoming government of the United States of America.
Okay. Well, okay, definitely the majorities in the Senate and House of Representatives should that be achieved by the Republicans, as you have correctly noted. The majorities are going to be counting as well how wide the majorities will be. If it's, say, for example, only one vote in the Senate, that may be an issue.
So, if I'm not mistaken, I think they have approximately 53 Senate seats. It's not just wants to have
so it was locked in.
A bit of a leeway, yeah, just in case one of them flips over, so votes with the Democrats. They still have that 2 to 3 member balance, just in case there's one that swaps over to the Democrats. So votes with the Democrats on a particular legislation piece.
Okay. Look, what on a deeper fundamental level, my opinion is that the wide red sweep practically provides, in my opinion, more confidence for Trump to actually proceed with changes in the US government. And it's not going to be only policies. I think there's going to be a very different mindset. We saw already Trump governing for 4 years. Even if at the first term there may have been some hesitancy, some, I wouldn't say discussions, but definitely a not so clear path, this time Trump is going to go all the way. And given that he has exactly this free hand also in the legislative, and I'm highlighting once again the judicial body, I think we may be seeing even more extreme options being picked by President Trump in various matters which may emerge. And that may shake the markets. There may be substantial uncertainty ahead. And given also Trump's willingness to change the environment, the political and economic environment in the US, I think we are in for a big, big sweep ahead.
I was going to ask, what do you think about Trump winning the popular vote? I think that's the first time a Republican has won the popular vote in perhaps a decade or two.
Could be, but the question, I'm going to be reversing this in the following sense that the fact that Trump has won the popular vote is another factor boosting his ego.
He's been given a clear mandate by the American people to do whatever he wants.
It was very, very clear in his victory speech how he presented it, and I think his overbloated ego got an even bigger boost. And I think psychology of Trump is going to be playing a key role here. Another question, by the way, is he still having a Twitter account or not?
Donald J. Trump did return to X, which
Yeah.
is the old Twitter, now under Elon Musk. He came back to it after Elon acquired the company and rebranded it to X. There is an official account. Now, to the degree upon which we're going to be seeing the old Trump tweeting by himself, that I do not know. But there is an official Twitter account, an official X account. And whether or not it will be handled personally by the president-elect, I'm actually not sure. But it would be very interesting if he does so.
Yeah. Okay, let's have a look at key policies. Starting with foreign policy, we would expect probably a quick end at Ukraine's war. Possibly also a quicker, maybe not quick, but quicker end at the Israeli-Palestinian conflict. And at this side, President Trump is expected to be pro-Israeli fair and square. And I wouldn't be also surprised to see further tensions or an escalation of tensions with China.
I think you are referring to the trade war that
Yeah.
is about to occur with the 60% tariff and all those economic policies. Trump is going to take a very different foreign policy approach to the Democrats. For particular Ukraine, if I'm being completely honest, it looks like he's going to be forcing the hand of Zelensky and Putin to essentially come to an agreement which will most likely favor Russia, just to bring an end to that war. I think that's also why we're seeing the Democrats rushing to push through the last $6 billion aid package to Ukraine before Trump gets into the White House. If I'm not mistaken, I read that earlier on today. So the Democrats are very concerned about what Trump might do once he is officially in office January 6th. Now, for the Middle East, it is a very, let's say, it's a very sensitive subject. Trump is clearly pro-Israel. He's got the Jewish lobby's vote. We've seen that from the Republicans. They're full and pro-Israel. There were some statements, if I'm not mistaken, from the Trump team, in particular that President-elect Trump, does not see the two-state solution as being entirely feasible based on the recent hostilities. So that might be an issue. Now, whether or not he follows through on his promises is always a question. We will have to see.
Yeah.
But in my view, and the way I'm looking at this now, is Trump has essentially told Israel and Netanyahu, do what you want, but once I'm in office, you're going to stop. So he's given them a free hand to do whatever they want within Lebanon and within Palestine, in particular Gaza, as long as it ends on January.
So 2 months.
Yeah, he's giving them 2 months. Do what you're going to do, but once I'm in, it ends. In order to fulfill, let's say, his promises to end the endless wars, which was a selling point to the American people. How effective that might be in giving them 2 months, it remains to be seen. But there is an affinity from Netanyahu towards Trump. So based on their relationship, etc., I think the Israelis would be more willing to bring an end to the war with the Trump administration, as it could potentially favor them more rather than the Biden administration.
Okay. What about internal policies?
Internal policies are going to be very, very interesting. As I stated at the beginning of our conversation, I want to see where exactly RFK is going to be put, where Elon is going to be put, such as leading the Department of Government Efficiency, etc. So I want to see his nominees. With the red sweep, Trump essentially can appoint anyone he wants without opposition from the Democrats. everyone will be passed through, nominated, should not be an issue because he does control the Senate. Whereas in the past, if you had the Democrats controlling the Senate, political appointees could take time. There might have been a discussion, perhaps an agreement, or revisiting some other names. So that there was a big back and forth between the president and the Senate. But with the Republican Senate, he can nominate and pass through anyone he wants. So we're expecting quick nominations and for them to be approved shortly as well. But the question remains, who is going where?
Okay. I think we're going to be seeing a very different way to actually govern the US. There have been discussions even among analysts about actually running the US as a startup. So that was an idea. But I would be focusing more on policies regarding the internal side, and we're talking about the economy, human rights, major topics which have been tantalizing voters over the past 4-6 months. Say, for example, woke movement. I think he had promised that he would be defunding schools which are teaching critical history.
Yes. Critical race theory or
Critical race theory, sorry. But let's focus more on economics. We are going to be seeing possibly further easing or contraction of corporate rate tax. So taxation in general for corporations is expected to ease. And that would be one fiscal policy which would be boosting the economy, or theoretically be boosting the economy. Second, I wouldn't be surprised to see him increase fiscal spending.
On the military in particular?
That may be the highlight, but I do expect that we may be seeing investments in infrastructure as well.
Okay.
It's going to be practically an expansionary fiscal policy. And it's going to be interesting whether that's going to be contradicting the Fed's intentions or not.
We do have the Fed's interest rate decision later on today.
Yeah.
Which they are expected to cut by 25 basis points.
Yeah, actually, Fed funds futures imply probability of around almost 100% for the bank to proceed with a 25 basis points rate cut. That's practically rate cut today is written in stone. The question is the next interest rate decision, which is in December. Fed funds futures imply that the market expects another 25 basis points rate cut. However, the percentages for such a scenario to materialize tend to be lowering on a day-by-day basis after the Trump got elected. So there may be some hesitation there. And definitely in January, the market expects the bank to remain on hold.
What I would like to see today is the press conference by Powell following the bank's decision, because I'm expecting the reporters to ask him about Trump.
Definitely.
I want to see if Powell slips up or provides some clues into the Fed's next actions with the assumption of a Trump presidency from the beginning of January onwards, because we clearly know that President-elect Trump is not a fan of Powell and the Fed's monetary policy decisions. He wants to have a bigger say in those decisions. And now the question is, how will the Fed adapt to an incoming president that has been very vocal and in particular against the quote-unquote leader of the Fed?
Yeah.
And whether or not Fed Chair Powell might adapt his rhetoric or raise some concerns. Now, the issue is, well, not an issue, but Fed Chair Powell is very diplomatic in nature. He's been able to navigate the markets and his speeches sometimes incredibly. And the question is, will he slip up? Will he let go some clue about what they're thinking about Trump? Or if the Fed is concerned that Trump's economic policies will increase inflation, so that might mean they might have to refrain from cutting interest rates, letting the new administration put forth their economic policies, vote them in.
But there will be also a question mark when and how he will be replacing Powell or not. But I think that Trump's going to be replacing Powell with a dove
In 2 years'
At-
time.
at some point or another. I'm not saying that he may not wait for the 2 years. He may try to replace Powell earlier.
Instantly.
Yeah, it's another big question. But back to the interest rate decision. Okay, overall, the 25 basis points rate cut is expected widely. Attention once it has been delivered is going to be turned, in my opinion, towards the accompanying statement and the forward guidance, which tends to be included in the comment section. Should the bank signal that it's ready to cut rates further, we may see the USD slipping, as practically there will be a confirmation of the market's expectations about the December meeting. On the flip side, should we see some hesitation on behalf of the bank to continue cutting rates, practically aligning with Atlanta Fed President Bostic, which a couple of weeks ago had stated that he would be even comfortable with one rate cut only in this year, we may see the US dollar getting asymmetric support. And at that point, it would be interesting to see also Powell's press conference. It's about half an hour later than the interest rate decision release. So expect that, or at least we expect that, there will be an expansion of volatility for a longer period, possibly for about 2 hours, up until the end of the press conference of Fed Chairman Powell. Now, we talked about the dollar. Trump's elections has given a wide boost to the US dollar. It was rallying across the board. We should be also noting here that maybe for the first time in a number of weeks, we saw the negative correlation of the US dollar with gold coming into effect once again. Gold's price tumbled. And then we have Bitcoin, which rallied. That was expected, and you got it right. It reached new record highs. And last but not least, we saw also US stock markets at the beginning a little bit more hesitantly, later on with a little bit more confidence, getting some support, rising. If I'm correct, S&P 500 reached record highs as well.
Yeah. It's very interesting. From a crypto perspective, I would like to see if they do go through with a strategic Bitcoin reserve. These are comments I would like to see President-elect Trump perhaps addressing sooner rather than later. We are seeing Bitcoin at a new all-time high. The S&P 500, I think, currently is also forming new all-time highs day by day. The correlation between the dollar and gold has re-emerged, as you correctly said. The question is, with the Fed, will we see, in the event of a dovish Fed, a retracement by the end of today and perhaps into Friday's trading session? And then would we see a resumption of gold strengthening over the next week? So my question to you is, are we going to see the Trump presidency, so the positive effect on the dollar, outweighing the potential implications on the Fed? Or will they cancel each other out? Or would the Fed be stronger in its decision?
In my opinion, the US elections are stronger. Because the US elections are there for the long term. You think about 4 years. And the uncertainty which is being generated. Or say, for example, crypto market and Trump. You did send me a clip where President Trump is discussing the possibility of paying off the national debt with cryptos.
Yes, but the source is from Cointelegraph. We haven't really verified the authenticity ourselves of that video. So it's from Cointelegraph, which in all fairness, despite them having some very credible reports, one of their interns did make a mistake earlier on this year, which resulted in millions being wiped from the market.
But anyway, that was indicative, even if it's not true. The fact that it could pass as being true is showing us how the market is perceiving President Trump as being crypto-friendly.
Clearly.
And I think that's one issue in conjunction with the idea of creating strategic reserves of cryptocurrencies from the US, which could create additional boost for cryptocurrencies right now.
For longer term support for digital assets, and in particular Bitcoin, there is one thing that I would like to see, which is the removal of SEC Chair Gensler, which
Yeah,
many in the crypto markets do consider to be the reason as to why the US has been behind in crypto compared to the EU, which in terms of regulation is progressing. Even Hong Kong is moving faster than the US. If you ask
okay.
me, the US has been left behind by the competition, which is something President-elect Trump has pounced on during the elections in order to gain that crypto voter support. And if Chair Gensler is removed, then I do think we will see overall the crypto markets gaining a very nice boost, even for a more longer term, as the regulating through lawsuits from the SEC might potentially come to an end. It would be a positive indication of being pro-crypto in terms of the government. And then we could see Ethereum, XRP, Bitcoin, and a variety of other coins moving in an upwards fashion.
Okay. Now, on the other hand, let's have a look also how the Fed's interest rate decision could affect US stock markets. Because we talked about the US dollar, we implied that a possible weakening of the USD could actually provide some support for gold. But what about US stock markets?
Well, the Fed cutting interest rates would ease the financial conditions surrounding the US economy. So, in theory, the Fed cutting interest rates would allow the US stock markets, and particularly the S&P 500, the Nasdaq, and the Dow, to move in an upwards fashion. Now, even if they do show some hesitancy, I think, as you said before, the 4 years of a Trump presidency could outweigh the decision by the Fed. So, if they're a bit more hawkish, we could see a retracement perhaps. But from a more macro perspective, I think regardless of the Fed's decision, we are going to be seeing stock markets move in an upwards fashion. Now, the rate at which they move in an upwards fashion could be intensified by a Fed rate cut and a more dovish rhetoric emerging from the accompanying statement and from the press conference. Whereas a more hawkish rhetoric could temporarily subside the bullish effect that we've seen on the US equities.
It's the third day in the greens for your stock market today,
Yeah.
right? Yeah, and still counting. Okay, so practically once again to sum it up, should the Fed actually provide a more dovish interest rate decision, we expect north trades for your stock markets and vice versa. Okay. What do you think that the Fed's path will be in the next year?
That is a that is a very difficult question. We've seen a lot of analysts getting this question wrong, in particular at the beginning of the year with the 7 rate cuts that were expected
Yeah.
and were being touted. Setting that aside, the way I see the US economy moving is we're getting a boost. We have a Republican sweep across the board. That's good for equities. Trump's policies are pro-business. So, of course, that could increase revenue for companies, increasing earnings per share, positive for investors, more money flowing into the US equities, boosting new all-time highs throughout the year, some corrections. Now, I think, well, under that assumption, the revisions of the employment figure, so the NFP figure for the US, are concerning. So the 23K last Friday,
Yeah.
that's worrying. Like the unemployment rate stayed set at 4.1%. That's fine, but with the revisions occurring and seeing 23K in an NFP figure, it's a bit concerning. I think if the Fed cuts today, no more cuts by the end of the year, moving into next year, I would like to see the Fed remain on hold for January and February. Let's see what the incoming administration does. Let the initial effect from the Trump presidency pass. So if companies are expecting less taxes, they could be hiring more, increasing spending. So NFP figure could be coming in higher, unemployment rate could decrease. So if I was the Fed, I'd remain on hold for the first 2 meetings. Let the dust settle. Let's see the true impact of the US economy and its actual health, and not the boost and the sentiment from a Trump presidency.
Okay.
And then I would decide. If I'm seeing the unemployment rate moving lower for January and February and March, let's say, I wouldn't cut. I'd remain on hold. I would take if I was the Fed, I would take 2 meetings at a time. So if I'm remaining on hold, one meeting, I would remain on hold the other, and then I would cut.
Okay.
So to answer your question, I think the Fed might cut, I'd say, three, maybe 4 times by the end of next year, and 4 is being generous. With the Trump administration and his economic policies, I wouldn't be surprised to see hesitancy from the Fed. So my best case scenario would be 3 rate cuts, 1 at the beginning of the year, 1 in the middle of the year, and 1 by the end.
And that could provide some support for the US dollar. Still on the monetary front, we have also BOE's interest rate decision.
Yes, also occurring today.
Yeah. BOE is expected to cut rates
Yes.
by 25 basis points. I wouldn't be surprised to see them cutting rates once again. They're already at high levels, besides the fact that they had already cut to rates, if I'm correct, twice.
Yes.
So,
What I would like to point is the Labour government's autumn budget that was released. It is not pro business and pro
no.
industry. It's something in itself. It's very interesting. I think though the BOE cutting interest rates is going to help the FTSE 100 as well. I would expect the BOE to adopt a more and more dovish tone now with the Labour government in and their autumn budget released. I would like to see a note by BOE Governor Bailey in regards to that as well. I would expect the BOE to continue cutting interest rates because the autumn budget, as I said just now, is not business friendly.
Well, Andrew Bailey has already called for a more aggressive rate cutting path anyway. So that would be one indication where the BOE is heading to. And to tell the truth, I wouldn't be surprised to see them highlighting the possibility for further rate cuts in their accompanying statement.
I would agree with that view.
Okay, so that could weigh on the pound somewhat.
Yes.
And could that be contrasted possibly with the US dollar or with JPY better on trading manner?
From a trading perspective, I think the pound is weakening, regardless of the Fed's decision. I mean, the way I'm seeing the UK economy move, the way it's heading, it's not looking that good for the pound. I think the BOE is going to be more aggressive than its counterparts at the end of the day. So I think that might be slowly being priced in. We will have to see, of course, from the comments.
Okay.
But looking at the big picture, I think if the Fed cuts, so let's say, for example, the BOE does as we're expecting and cuts interest rates, and then GBP USD moves in a downwards fashion, so cable, and then the Fed cuts, we might say retracement. But from a general perspective, I think the pound is weakening. I think they're going to be more aggressive in their rate cutting path.
In regards to cable, I think that BOE will be cutting rates, will be highlighting the possibility for more rate cuts to come. That would be weakening the pound, and i.e. cable is falling, and then we may see the Fed cutting rates, but being hesitant whether it's going to be cutting further or not, and at which pace, which may provide support for the USD, and that could weigh on cable even further.
So we agree that GBP
Yeah,
USD
it's
today.
going down. Probably it's going down. Well, it's something which, it's this uncertainty, of course, we will have to wait and see, but that would be the best guess for today.
On the last note, should we discuss the recent implications in Germany on a political level?
Yeah. Now we have Scholz practically firing the finance minister, Lindner, who is also the leader of one of the 3 parties which have been consisting the coalition of the German government, the Liberal Party. Albeit, if I'm correct, it's the smallest of the 3. The votes in parliament were key in getting a majority. Now, with the majority lost, practically Scholz's, Chancellor of Germany, Scholz's choices would be to lead a minority government. However, for a minority government to exist, that would imply that these Christian Democrats, the center-right party, will have to tolerate it. And that does not seem to be the case.
No.
The Christian Democrats have already issued an announcement that there should be a confidence vote earlier on. Be advised, the Germans are being tantalized on a political level. They do not seem to be able to achieve a budget because practically the German constitution is writing clearly that they are not allowed to exceed income. Practically, income and expenditure have to be at least the same. If not, income be more.
To avoid a budget deficit.
Yeah, and that's constitutional and practically, given that Lindner was also the finance minister.
Yes.
Okay, a rift between the chancellor and the finance minister cannot go well.
This is not looking good. And with CDU calling for elections as soon as next week, we've discussed this before. You said that it's not likely to happen by next week, but
The confidence vote within the German parliament could occur, and should the confidence vote succeed in ousting the current German government, then we may be seeing elections, I think, beginning of December, mid-December.
if it happens next week.
Yeah.
Currently, I think they're on track for March. The vote of no confidence has been set for the 16th of January 2025. If they fail to secure the confidence vote, it moves then to March for elections. The question is this going to impact the euro now, or will we see the euro being weighed from 2026 onwards, so from the beginning of January?
German political instability would be providing with the far right, the AfD, for a chance to demonstrate wider strength. Now, the possibility that the AfD may gain and practically become necessary for any government to be formed, that would more or less provide reasonable grounds for political instability in Germany. There would be most probably a dead end. And yes, that could weigh on the euro on a political level.
It's going to be very interesting to see
Yeah.
Germany's elections.
It was a surprise, but actually the far right in Germany got a boost from Trump's win.
In the polls?
Yeah, they got this more support. Anyway, that should sum it up for the day. We hope that you found this discussion useful. For more of us here at IronFX, best wishes for solid trading.
Okay, let's go ahead and get started. So as per usual, a risk warning and disclaimer. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you fully understand the risk involved. A disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. I'm Melanie, and I will be a speaker for today. I'm an investment analyst at Rocket, who are finalists for Best FX and Equity Research in the years 2019 to 2021. Here's our agenda for today. We're going to start off by talking about some fundamental trading strategies, Then we'll talk about the top 10 cryptos, what their value propositions are, where you can keep up to date on their developments and trading their cryptocurrencies. Okay, so let's go ahead and get started. So one of the first mistakes that people have when it comes to fundamental trading is not having a trading plan. So having a trading plan is important for a couple of reasons. Firstly is consistency. So a trading plan helps you to maintain consistency in your trading approach. It outlines your trading strategy, including your entry and exit criteria, risk management rules, and position sizing. So by following a well-defined plan, you're less likely to make impulsive decisions based on emotions or market noise. Consistency is crucial for long-term success in trading, as you would know. So having a well-defined trading plan helps you to maintain that. Next is objective decision making. So a trading plan provides a framework for making objective decisions. So it helps you to define specific criteria for entering and exiting trades based on technical or fundamental analysis. So this kind of eliminates the guesswork and emotional biases that you might have when it comes to trading and allows you to make more rational decisions based on your predetermined rules. Number three, risk management. So we'll go through a couple of risk management tools in a little bit, but risk management basically is really important, as you would know, since it helps you to protect your capital. So having a trading plan that incorporates your risk management basically outlines how much risk you are willing to take on with each trade, where to set your stop loss orders, and when to take profits. So by implementing proper risk management techniques, you can limit your potential losses and preserve your trading capital. Next is focus and discipline. So a trading plan keeps you focused on your focused on your trading goals and prevents distractions. So it helps you to avoid impulsive trades, and chasing after hot tips. So following a plan requires discipline and adherence to the rules that you've set for yourself, and this discipline is essential for overcoming the emotional challenges that come with trading. Evaluation and improvement, that's pretty straightforward, I think. Basically, keeping a record of your trades and comparing them with your plan can help you to identify any strengths and weaknesses in your trading strategy. So this can allow you to continuously improve your trading approach over time. And lastly is confidence. So a well-defined trading plan gives you confidence in your trading decisions. So with a structured framework and a set of rules to follow, it can help you to reduce uncertainty and anxiety. And obviously increase your confidence as well. So you're more likely to stick to it during challenging market conditions and avoid making impulsive or emotional decisions. Another mistake that some people have is not having a risk management strategy, which we mentioned earlier. So one of the most basic risk management strategies that we follow is proper stop loss and take profit placement. So the proper stop loss and take profit placement is important to ensure that you maximize your wins and minimize your losses. So your stop loss should be placed beyond your resistance area, while your take profit should be placed before. Okay, so in this example, you can see we're going in for a sell, which is why our take profit is placed below. So here in this image, right at the bottom, you can see that's a scenario where we're going in for a buy. So your buy entry, we're going in for buy, we'll place our take profit on top, but below your confluence. Fibonacci confluence will be placed, your stop loss will be placed below that. So it's basically the opposite. So the reasoning behind this stop loss and take profit placement, let's start off with a stop loss is basically that you should always put your stop loss beyond a key Fibonacci confluence area. And when we say Fibonacci confluence area, we are talking about areas where two or more Fibonacci levels line up. But even more important than that, this applies for any major resistance areas. So it could be like your pullback, overlap areas, Fibonacci of even your pivot point levels. As long as you have a strong resistance area, this applies as well. So the reason for this is because more often than not, price tends to get attracted to such strong areas of confluence. And if your stop loss is right before instead of beyond it, you'll most likely get stopped out before your market reverses. So that's also one of the reasons why most people wonder why they got stopped out right when the market starts to reverse, and then they start complaining about stop hunting. Next is your take profit should be placed before, which means that you should always place your profit target before a key resistance or confluence area. Reason for this is because when price reaches that confluence area, there's a high chance that it won't be able to go beyond it. So instead of reaching your profit target, it reverses back to your entry, or even worse, your stop loss. And this is one of the reasons why people complain that the market is being manipulated, because they missed the take profit by 1 pip. So here's another risk management strategy, which is break even. And break even in trading basically refers to the point at which a trader reaches a level where he has neither made a profit nor suffered a loss. So it's the point where the cost of the trade, including fees and commissions, is equal to the price at which the trade was executed. So for example, if a trader buys a stock at $100 and sells it at $110, the trader has made a profit of $10. On the other hand, if the trader buys a stock at 100 and sells it at 90, the trader has suffered a loss of $10. So in this example that I'm giving you guys, we're talking about stocks, but this applies for any kind of trading, any kind of security or asset as well. So if the stock is sold at $100, since that's the price that he bought, he has neither made a profit nor suffered a loss and has reached its break-even point. So that's kind of the idea behind it. So what does it mean when it comes to trading? So it's basically the level where you are in profit and recognize that there is a risk of reversal back to your entry. So here we have an entry at the breakout of the multiple swing high resistance level, where we are hoping for price to push to our take profit. So take note of our original stop loss at number 2, and that's in line with a swing low support. At point 3, price reaches our break-even level and reverses off of it. Hence, we move our stop loss to the entry to protect our position. So if price continues to our position, that's great. As in, if it continues moving to our take profit, then that's obviously a good sign. But if it reverses back to our entry, we want to be protected. So here we can see price has broken above the break even, but quickly reversed and hit our stop loss. Okay, so another risk management strategy is partial profit. So partial profits basically refers to the practice of closing only a portion of a trade when it reaches a certain profit target, while leaving the remaining position open in order to potentially capture further gains. So the idea behind partial profits is to lock in some of the gains while giving the remaining position room to potentially continue to move in the desired direction. So, for example, if we go back to that example of stocks, so if a trader buys 100 shares of a stock at $100 and the stock rises to 110, the trader might choose to sell only 50 shares, taking a partial profit of $500, and the trader would then still have 50 shares that are now worth $550. So then he could potentially continue to make profits if the stock price continues to rise. So this basically is typically used when there is a strong resistance area and you are kind of unsure if prices will continue to rise to your take profit. So that's kind of the idea behind this risk management strategy. Okay, so here's our partial profit example. Here you can see that we have a pretty strong resistance area at our partial profit that's in line with 38.2 Fibonacci retracement and a 78.6% Fibonacci projection. Okay, so we're unsure so our first support here is our buy entry, and we're expecting prices to rise to our take profit. But there is a strong resistance at the Fibonacci confluence area, which is this level that we mentioned earlier. So we're unsure if prices are going to be able to push past it. Okay, so as a matter of fact, price reacted off that strong resistance area at our partial profit and reversed off of it instead of heading to our take profit. Okay, so you can see we got out of that trade before prices started heading back downwards, and we got out with a partial profit. Okay, let's look at our break-even placement example now. So in this example, our entry is in line with a 100% Fibonacci projection level. Prices currently are moving towards it, and we're expecting prices to reverse of our entry and hit towards our take profit. So now we go in with a couple of Fibonacci levels, and we notice that there is a Fibonacci confluence area right in the middle between our entry and our take profit. So this level is in line with a 23.6 retracement and the 30.2 retracement as well. So this confluence area, we're unsure if prices are going to be able to push past it towards our take profit. And it's also the level that we've identified where prices are where we would make a break even. So you can see prices have now reached our break even. So what we do is move our stop loss, adjust to our entry to minimize losses, and so that we prepare ourselves for this in the event that this happens, which basically prices are not able to push past our break even and prices reverse off of it and hit towards our stop loss. Okay. Let's talk about idea invalidation now. So idea invalidation basically is another risk management strategy. Let's start off by talking about what it is first. So in trading, the idea of invalidation basically refers to the process of evaluating a potential trade idea and determining if it should be disregarded or acted upon. So essentially, it's a way of determining if a trade idea still holds up in light of new information or market conditions. So here's how the process of idea invalidation typically works in trading. Firstly, you have the initial trade idea. So the trader has kind of an initial idea about potential trade based on the analysis of the market conditions, technical indicators, etc. And then followed by the evaluation of the idea. So looking at the current market conditions and other relevant info like economic data, you then determine if the initial trade idea still holds. Then you come up with your invalidation criteria. So the trader then establishes criteria for invalidating the trade idea, such as specific price levels or market conditions that would cause them to reconsider the trade. Next is monitoring. So you'll just monitor the market to see if the invalidation criteria are met. And lastly would be invalidation. So if the invalidation criteria are met, the trader will then choose to exit the trade or adjust their position. On the other hand, if the criteria are not met, the trader may continue to hold the position or add to it. So it's basically a crucial step in a trading process that helps traders make informed decisions about their trades and avoid potential losses. Okay, so idea invalidation is usually placed before your stop loss, and it's the level which you basically admit that you're wrong and that you want to get out of the trade ASAP. So when the level is reached, your take profit is moved to your entry, giving you a small chance to get out at break even. So you can see in this example, we have point number one which is at our entry. Okay, and our idea invalidation is placed at this swing high level here, just below our stop loss. Our original take profit is placed before this support level with 3 swing lows, and we have a modified take profit once price breaks above our entry. You can see breaking above, and it triggers our idea invalidation. So earlier I mentioned our idea invalidation criteria. So that's basically what it looks like in the form when we are using it in technical analysis. So our idea invalidation here is the swing high, and prices have triggered our idea invalidation, which is why we've modified our take profit and we're moving it back to our entry. Okay, so if prices continue moving upwards, obviously your goods stopped out, but you are hoping that with prices, or rather with our take profit moving up to our entry, you're hoping that this gets us out of a losing trade. Okay, so this is what it'll look like in an actual chart. Okay, this slide first. So you can see here, we are starting off with our entry, with prices heading towards our entry at the swing low. We've then placed our take profit at this overlap level that's in line with a 50% retracement. Okay, and you can see here the 50%, we have two 50% retracements that line up with our take profit. And we also have a 127.2 extension level that lines up with the minus 27.2 expansion level as well. And that's also in line, sort of in line with this swing low here. I mean, it's kind of beyond it. Okay, so we are expecting prices to bounce off of our entry and hit towards our take profit. Okay, but we've placed our stop loss below this confluence area, and we're placing our idea invalidation right on that confluence area. So that kind of forms our idea invalidation criteria. Okay, so prices do approach our entry, but they don't bounce off, and instead they break past it and hit towards our stop loss. Okay, so once our idea invalidation criteria is triggered, our take profit is then moved to the entry so that you get out of your trade ASAP. And you can see that's exactly what happened here. So we got out at break even. Okay, so it's a good thing that this happened, otherwise price would have stopped us out. Are there any questions so far? Okay, if there are no questions, let's go ahead and continue. So the next method that we're going to be talking about is your trailing stop loss. So trailing stop loss is basically a type of stop loss order that is set a certain percentage or dollar amount away from the market price. So the idea behind a trailing stop loss is to lock in profits while giving the trade room to breathe, as the stop loss follows the market price as it moves in favor of the trade. So going back to that example, let's say you buy a stock at $100 and you set a trading stop loss at $10. So as the stock price rises to 110, the stop loss will follow, now at 110. Oh, sorry, not now at $100. So if the stock price drops to $100, your stop loss will be triggered, selling your position and protecting your profits. So the trailing stop loss technique can be useful tool for traders because it allows them to manage risk and lock in profits dynamically as the market moves. So this is different from a fixed stop loss, which is set at a specific price and does not change as the market moves. So it's important to note that the trading stop loss is not a guarantee that you will exit a trade at your desired price. It's just due to market conditions, it can trigger a stop loss order before it reaches your desired level, leading to an unexpected exit from the trade. So here are the different methods of trading stop loss that we're going to be covering today. First is our moving average. We have parabolic SAR, chandelier, ATR, support and resistance levels, and a combination of these methods. Okay, so let's get through them. Firstly, in this example, we are using our moving average. Our sell entry starts when prices break out of this ascending trend line, and also out of this overlap level. Okay, you can kind of see it breaking below this moving average as well. So now prices are moving below our moving average, and our trading stop loss is triggered over here. Okay, so trading stop loss is triggered, prices moving above our moving average, and we got out of the trade. Okay, so it got us out before this happened, before prices started to rise back to our entry. Another example is our trend line breakout. So here we have prices moving in. It's the same example, okay? We're just using different methods on the same chart. So here we have prices moving below our descending trend line. So again, similar idea. Once prices break out of that trend line, then we get out of the trade. Parabolic SAR, you can see it's pretty much the same idea as well, with prices moving below your parabolic SAR. That's also a signal that prices are moving in a bearish momentum. And once prices kind of break above it, that's a sign that the trend has changed. So got us out before the change in trend as well. Chandelier and ATR. So we have prices moving below. Kind of that same idea. Once it moves above, your ATR stop is triggered and your chandelier stop is also triggered. Okay. Are there any questions? Okay, let's talk about let's do another example. So here we have a support and resistance levels. So we're going in for a sell entry. As you can see, prices breaking below that ascending trend line here. Okay. So prices are breaking below it, so we're going in for our sell entry towards our take profit below here. So we're going in with moving average. Prices are moving below the indicator, which is a bearish signal. Okay, and we got out at take profit before prices started to rise again. So here's just a very simple example of how you can combine your indicators with your support and resistance levels. Okay, Okay, so now let's talk a bit about what exactly is the FX News calendar. So, it basically allows traders to see at one glance all important economic data releases, and it shows you key events such as your GDP, CPI, NFP, crude oil inventories, and even central banks' monetary policy meetings. So we have a few examples here of FX News calendars. On the left, we have investing.com, and on the right, we have forexfactory.com. So let's go through a few high impact events to understand what they mean and how they can impact the markets. We've gone through some technical strategies already, so it's important to be able to combine those with our fundamental events as well. So firstly, we have our FOMC meetings. FOMC is your Federal Open Market Committee, and this is the US Fed's way of communicating their view on monetary policies. Next, we have the Fed interest rate decision that comes together with these meetings. So if the Fed is dovish, the USD is bearish. If the Fed is hawkish, the USD is bullish. If interest rate goes up, the USD is bullish, and if interest rate goes down, the USD is bearish. Okay, some employment data. If NFP is basically your non-farm payroll, this measures the change in citizens that are employed from the previous month, excluding the farming industry. And unemployment measures the total unemployment of workforce that is seeking active employment from the previous month. Crude oil inventories, these measure the weekly change in the amount of crude held by US firms. If crude inventories increase, oil prices should drop. EIA admin is a short-term outlook, the monthly forecast for the year ahead, demand and prices across major fuel types. Okay, some benefits, basically, depending on your individual trading style, it helps you to plan and allocate trades for the day, week, or month ahead, helps to alert the individual to upcoming important news that might affect volatility. And yeah, so let's now jump into our crypto. So as of last year, in June, these were the top 10 cryptocurrencies. And this year, as of September, these are the top 10 cryptocurrencies based on market cap. So what are their value propositions? Basically lies in their unique characteristics and potential benefits compared to traditional forms of money and financial systems. Okay, so firstly, it would be your decentralization. Since it operates on decentralized networks, it provides individuals direct control over their funds and reduces the risk of censorship. Security and trust. It uses cryptographic techniques to ensure security and integrity. Also, because it's decentralized, it also offers varying degrees of privacy and anonymity. And borderless transactions. You're able to send and receive funds globally. And financial inclusion. So since these are decentralized, they don't rely on banks. So they have the potential to promote financial inclusion by providing access to financial services for the unbanked populations. Um, yeah, and some cryptos also support programmable smart contracts, which automate and enforce agreements as well. Okay, so of course, we all know the challenges and risks that exist, such as the volatility, the regulation, scalability, and environmental concerns. But of course, you can still keep up with crypto developments. And crypto Twitter, CoinGecko, which basically allows you to track activity rates and popularity of your favorite coins and tokens in one place. Project website is they usually have an attractive, user-friendly website that displays the features of the project. And news outlets, so you might be able to get some reputable crypto news outlets out there. Some form the backbone of what you see on crypto Twitter as well. Okay, so These are the most popular cryptocurrencies by far, by market cap. And how can you trade it? So you can trade it on traditional brokers such as your IronFX, crypto exchanges like Binance, Coinbase, and Kraken, and CFDs. So crypto coins, basically, there are a few differences between the coins and the CFDs. So crypto via exchanges provides access to other crypto services such as your DeFi and your NFTs. You can make cross-border payments without incurring third-party fees. Trading fees are often lower than traditional brokerages, but withdrawal fees are charged. You also have access to a wider range of cryptos, and exchanges are susceptible to hacks. CFDs, no withdrawal fees, and it allows traders to speculate on price movements of crypto without owning the underlying tokens. It also allows traders to capitalize on price movements without having to manage the process of securely buying and storing crypto tokens on exchanges or a ledger. Yeah, and you can open both long and short positions, and there's virtually no risk of attacks or hacks. Okay, let's go through some of the events for this week since we have time. Okay, so for today's, so we normally will look at forexfactory.com, but it's entirely up to you which economic calendar you wish to use. So this week, you can see I have it filtered only to look at the orange and red icons. And that basically is the medium to high impact events. But if you wish, you can also look at the yellow and gray icons, which are basically your low impact and non-economic events. So all of the events, oh, okay, oops, okay, thank you for letting me know. Okay, should be able to see now. So, okay, as I was saying, this is just forexfactory.com. Yep, thank you. Okay, yep, so you can change the calendar. It'll give you the really depends on your own trading strategy, but we normally just like to look at the upcoming week. So you can do that there. And you can see I have it filtered to only look at the orange and red icons, which I mentioned earlier are the medium and high impact events. If you click on this green icon, you can also look at the low impact and any non-economic events. So that would be your bank holidays. Event types, you can filter out any that you're not interested in or any currencies that you're not trading. I just prefer to look at all of them. And yeah, you can see that there are a lot of events to get through, which is why I normally just focus on the medium to high impact events. So for this week, on Monday, we had China's CPI and PPI. So both came out to be lower than forecasted. Tuesday, we have UK's, or yesterday, we had UK's claimant count change, which was higher than forecasted. And average earnings index was lower than forecasted. And Canadian Gov Macklem speaks. Wednesday, which was today, UK's GDP came out to be lower than forecasted at 0.0%. And yeah, for the rest of today, we can expect US inflation data with the core CPI month-on-month and year-on-year data. Thursday, tomorrow, we will have US crude oil inventories, China's new loans data, Eurozone main refinancing rate, monetary policy statements, US core PPI, unemployment claims, and we have a ECB press conference as well. And in Switzerland, Chairman Jordan will be speaking on Friday, and the US 30-year bond auction will be happening as well. So, yep. We like Forex Factory because at one glance you can see all of the important news, especially the high and medium impact events. And you can also see the previous data, forecasted, and the actual data all at one glance. There are also some forums if you're interested in that. There are some news outlets as well. Yeah, there's some crypto forums as well in case you were curious on that. Yeah, I think that's kind of all I have for you guys for today. Um, yeah, if you guys have any questions, feel free to let me know in the chat. But if not, that's all for today. Thank you guys so much for joining me. I hope you guys found this session helpful, and I will see you guys again next week. Thanks, everyone. Bye.